Okay, we're live. All right. Welcome, everybody, to Wall Street Reporter's Discovery Day live stream, where we bring you those stocks which have that multi-bagger upside potential. Companies going after massive opportunities that are at a key inflection point and with multiple catalysts in place for upside potential. And we are back with Appia Energy and Tom Drivas, the CEO. Tom, welcome back to the program.
Thank you, Jack. Thanks for the opportunity to talk to your, present Appia to your subscribers or investors.
Yeah, and here's the thing that's very exciting. The last time we had you on the program, which was like 3 years ago almost, and the stock went up, I think it was, I don't know if it was 500 or 600%, I think it was a little bit more within the period of about 6 months.
We went bigger, up from 15 cents to $1.21, Jack.
Okay, so it was a 10 bagger. I'm being too modest. I'm being too modest. Right. So we're going to find out if lightning can strike twice. Now, here's what's important for people to understand is Appia Energy is positioned really in two of, I think, the hottest areas for investors, the generational opportunities. One is uranium, right, which is going to be essential for powering tomorrow's EVs. We know that the fossil fuels, they can't support the massive needs for energy that are coming in. So uranium is going to be very important for that nuclear energy, clean nuclear energy, and also rare earths, which people are not really talking about. People don't realize the importance of rare earth minerals. Which is, again, all of today's and tomorrow's technologies depend on that, whether it's your phone, whether it's everything. And China has, 90% of the market. So, and Appia obviously is, I'm going to let you explain the story, but I think where Appia is extremely compelling. So I think, Tom, for today's live stream, what I'd like to do is we'll have you, share the story, the official story, the PowerPoint. And then we're going to come back for Q&A. Again, the best part of these live streams is hopefully we get some good questions, and we'll have it's an opportunity for investors to get their questions answered directly from the source. And with that said, Tom, I'm gonna turn it over to you. So let me get this. Can you see the presentation on the screen?
Yes, I do. Yes.
Okay, so Tom, I'm going to disappear, and I'll come back to you for Q&A. So take it away.
Very good. Thank you, Jack, again. Well, Appia is a company that is in exploration of critical rare earths and uranium in the Americas. Throughout this presentation, I will be making forward-looking statements. Please be advised to do your own due diligence and consult your own investment advisor before you make any investments. This is a slide with a quick overview of the company. It's you can basically, I'm going to skip this because it's there. You can read it. All I want to point out that Appia's management and board has over 250 years combined industry experience. And we are trading on Toronto OTC and NASDAQ, and we're debt-free. We've got $2.5 million cash, and the market cap is approximately 25 million Canadian dollars. Now, we want to talk a little bit about rare earths and uranium, which are both critical materials. Both the U.S. government, the Europeans, the Canadians, and the Australians, they all have listed rare earths and uranium as critical materials. What's happening is there's a global transition to clean energy right now. It's underway, and this critical material, these rare earths, are critical for this energy transition. The highest rare earth demand is for light, neodymium and praseodymium, and heavy rare earths, dysprosium and terbium. because those rare earths, they have some magnetic properties that are used for building permanent magnets, which are in turn used for in electric vehicles, drivetrain in electric vehicles, wind turbines, and also other technologies. There's great demand for these two elements, so the prices have gone up, and there's experts forecasting increasing demand for this for the 3 or 4 different rare earths. So it is very important to have those rare earths, because if those rare earths are not there, then there isn't much chance of the successful transition from to the clean energy. So those rare earths are used, as I mentioned before, in permanent magnets, and permanent magnets are very strong and powerful. So they're used in electric vehicles and wind turbines. And the advantages of this permanent magnets is there can be used. Have them in any shapes or any strength. They're light and powerful, so therefore they can they can decrease the weight of the car, and obviously have faster mobility. And the other thing that could be with this happening is also reduce the price of the batteries. You can because you need smaller magnets, and then basically you need less lithium, less cobalt, less nickel. So there's a big advantage to have those critical rare earths in the production of magnet. Permanent magnets. Now, the Western world is desperately working to build supply of critical materials outside of China, because China currently control up to 90% of the rare earths supply, especially and the magnet production of magnets. So the rest of the world is looking to have some secure supply outside of China, especially in the last few years, what happened with the supply during the COVID period, where the supply was coming from one source. Now, why Appia? As Appia is exploring for high-grade critical materials in both rare earths and uranium, we do have 2 projects of rare earths. One is in northern Saskatchewan. The Alces Lake project is high-grade rare earths, critical rare earths in monazite, and the other project is in Brazil. We acquired a new project in Brazil this year, and this is an ionic clay rare earth project, and it's located in Goiás State in Brazil. It has both high grade critical rare earths, both in light and heavies. In addition to that, Appia has a large uranium and rare earth property in Elliot Lake, Ontario, with a large resource, and also we have 4 other exploration projects in uranium projects in the Athabasca Basin in Canada. Now, there are a couple of types of deposit, rare earth deposits, producing types. First of all, let's talk about the ionic clay. They're mainly located in tropic environments. What happened is the rare earths have leached from the surrounding rocks into clay. So those mines are usually found in southern China, in Brazil, in Africa. And these ionic clays, usually the rare earths are found within the top 10, 20 meters from surface. They're very easy to explore, and they're relatively easy to produce, to mine. It's just basically you dig the rare earths, the clay from the earth, and you leach it, and then you put back the whatever you have left in the place in ground. So there's and also the other huge advantage is there is very low radioactivity in this ionic clay type rare earths. So it's very environmental friendly, or is as environmental friendly as possible to get from rare earths these days, and it's easier to also permit, and it doesn't require a lot of upfront cost to put it into production, and it's relatively cheap operating cost. Now, the other deposit type is the hard rock one. Those are deposits I found in China, USA, Australia, Canada, for example. They're mainly light. They contain mainly light rare earths, where the ionic clays they have both lights and rare earths. So they have better distribution. They're in terms of capex and OPEX, they're similar to other hard rock mining deposits. They have higher costs, and in terms of drilling and blasting, they're usually when it comes to mining, there's either large open pit mines or underground mining, and they usually come with radioactivity. So you have more issues to deal with the tailings, and also in terms of the processing, it's high temperature cracking, so it's more expensive. Now, this is a picture of target 4 of the PCH ionic clay project in Brazil. It's very easy terrain, and it's we're very excited about this project. This is again Brazil. The project is in the center of Brazil. You have in the Goiás State. This is our project. It's about 17,000 hectares. And what I'd like to sort of tell you a little bit about that, because, as I mentioned, we're very excited about this project. Appia optioned this property in July of this year. That's where we signed the deal to have an interest to earn 70% on the project by spending $10 million over 5 years. As I mentioned before, it's about 17,500 hectares. And again, we're excited about this project because it contains both light and neodymium, praseodymium, and heavy dysprosium and terbium rare earths, which are used in the permanent magnets, and also it's very low in radioactivity. The location is, we couldn't ask for anything better. It's 30 kilometers from a mining town. We have very good, there's a well-developed road network. There's power and there's water on the property. And so this project, we have a good relationship with the landowners and the local surrounding community. So, and we do have as part of the deal, we have a very experienced and very supporting a team in Brazil, exploration team. So again, this is a map of target 4. This is one target of 8 that we acquired. And you can basically see a lot of the drilling that we do. This is only the drilling for the RC, the reverse circulation drilling. Now, from the end of July to the middle of September, we had an exploration program there, and we drilled 147 vertical holes, RC holes for roughly 2,000 meters. We drilled one diamond drill hole, 243 meters, and we drilled 70 auger holes. The auger holes are not shown on this map. They were done basically around the target to expand, to see the new areas and expand this target. Now, assay results are pending from this drilling. We just announced the first results last week from the first 17 holes, and I have to basically say we've got a very we've implemented a good sampling and assaying system, and it's in place, and we have over 3,000 samples from this drilling to be assayed and to be released in the next few days or weeks. Now, again, what excites me about this project is the results of our first 17 RC drill holes that represents a significant in doubling of the increase, basically, of the zone. The previous owners had done some auger drilling, and this was down to 7-8. The zone thought to be that 7-8 meters deep or wide. And now we found out the average depth of this, or the mineralization extent, on an average basis of 13 meters. And the average grade of this mineralization is about 1,566 part per million total rare earths oxide, which is comparable to the or surpassing the other known known deposits, ionic clay deposits. So now in the same area, there's a deposit that is going into production. It's a huge deposit, 900 million tons, and their average grade is 1,200 parts per million per ton. On this first 17 holes, the average basically is over 1,500 parts per million, which makes it a high grade ionic clay prospect. So now I can go through this drilling results, but this is the highlights. All this information is on our website and our last week's news release. What we've seen is, for example, on hole 1, we've got 1,914 parts per million, and over 15 meters from top to bottom mineralized, and we've got 510 parts per million magnet rare earths, which is basically the ones that are used for the production of permanent magnets, which is roughly 27% of the total rare earth oxide. And also we've got about 291 parts per million heavy rare earths on this one, which is again very important. And then we've got 9 meters of 366 parts per million rare earths. Now you can see the same thing on this next hole, and the next hole, and next hole. Now you can also see that, which means is very consistent. The mineralization is very consistent, and they're very well distributed throughout the zone, which is very exciting. And also within that, there is our higher grade zone, anywhere from 3,000 to 5,000 ppm, basically within that. Now, just to give you some perspective, there's a deposit, an ionic clay deposit being developed right now in Africa, in Uganda, and their average grade is 600 ppm, 650 per parts per million. As I mentioned, the deposit in the same state that is being developed in Brazil is the average is 1,200 parts per million, and also as far as we know, the highest grade Chinese ionic clay deposit is up to 700 ppm. So this is extremely high grade, and we're very excited, and we're looking forward to the next set of results. As I mentioned, on the RC drilling, we've got 147. We're only released 17 for the first 17 holes, and the more are coming, and then we've got another 70, at least another 70 auger, and then one diamond drill core hole. So they're going to be we'll be releasing news throughout the the next few months, and at the end of this program, we're planning to put our first 43-1 resource, and to follow with a PEA, and if everything works out well, next year we want to move it into a pre-feasibility study. So we're quite excited on this. Now, this other project in Saskatchewan, as I mentioned earlier, we have the Alces Lake here, which is another high-grade deposit. Project in rare earth in just northwestern Saskatchewan, and then we have this 4 uranium prospects. Just a little bit about Alces Lake. It's located in Saskatchewan, a prolific Athabasca Basin, which is the most attractive mining jurisdiction in Canada. It's world-class critical rare earths with grades up to 50% total rare earth oxide, plus some gallium, extensive high-grade monazite mineralization on surface and near surface showing prospects up to 80% coarse grain monazite. This 80% monazite, it doesn't happen in other places in the world. Geologists haven't seen it anywhere else. So it's a very exciting project. We've been working there for a few years. We just finished a large exploration program this summer, and we've got 40 more holes, 40 drill holes that we did, and we'll be announcing results from that. This is a picture of the monazite right on surface. This particular one, it has 31% weight percent total rare earth oxide, 7.2% weight percent Creo, which is more or less the magnet rare earths, and it's 7% of weight percent neodymium oxide and praseodymium, the light rare earths that again we mentioned that are used in rare earth in permanent magnets. We're also excited about this project because the Saskatchewan government has funded SRC, the Saskatchewan Research Council, and they're building their first processing facility in North America, and they will be processing monazite. So therefore, Appia does not have to build their own facility. That we can really work a deal with them and have the monazite processed in Saskatchewan. Now, the Elliot Lake uranium project, huge property, about 30,000 acres, I believe. We've got this is an old mining camp. It produced over 300 million pounds of uranium. It also produced commercially some rare earths, especially yttrium. And Appia has a large uranium resource, but combined inferred and indicated resources is about 55 million pounds and about 180 million pounds rare earths. Now, we're not getting any value for that. The market does give us assign any value for this, but uranium prices have gone up very much so in the last couple of years. They went up from $20 to over $70, and again, experts forecast that the uranium, which is used primarily in generating clean energy electricity, it could go as high as 150 to 200 pounds. So, which means this project would be very valuable for us. Again, we've got 100% of this project. It's in the right area. All the infrastructure is in place. There's no we got power, we got energy, we've got even natural gas on site. Cameco has a refinery, uranium refinery, 120 kilometers away. Sudbury is a mining town, 100 or so kilometers away with all the supplies. And so we're very excited about this project. Is a very valuable asset for us, especially when uranium and rare earth prices go higher. And this is a table of that, and this is our contact information. I'm done, and I'm open for any questions.
Fantastic. Okay, so Tom, very exciting stuff happening. I think we really need to kind of address a couple of, I think, key points. Is I would say from this, the takeaway I have is, okay, so the rare earths project in Brazil, the highlights that I wrote down here is, okay, number one is you have this massive area. You're already getting very high grade results so far, which apparently is it kind of on par or better than some comparable rare earths projects out there, like next door in Brazil? And
there's one project next door in the same area, basically, that is going into production. It'll be commissioned in the beginning of next year, from as far as we know, and their average grade is 1,200 parts per million. Our average grade so far is 1,566. So basically, I mentioned the project in Africa, where they are developing a project there with 600 part per million, and as I mentioned, the Chinese projects are basically up to 700 parts per million. So this makes it a high grade project. Now, I also have to mention that something else, that there's zero overburden. What we've seen on this drilling, it starts from surface and it goes down to 15 meters. And in some cases, we've seen, potential to down to 25, 30 meters, but we don't have those results yet. So zero overburden, very easy terrain in the right location, not a lot of very, very low radioactivity. And the other good thing about Brazil is they've got the government would like to fast track this kind of deposit. So they say they can give you an environmental permit in 6 months.
That's very quick, right? In North
very
America,
quick,
how long?
Yes, very quick. I mean, North America, it probably takes you 6 years. Yeah.
Wow. Okay. So the bottom line is this, right? You're getting very high grades. These are commercial. These are very, this would make this a very commercially viable project, right? I mean, obviously you're expecting to get a 43-101 resource. You said by the summer next. Next...
Hopefully by the end of the year, beginning of next. By the end of this year, in the next few months, once we get all these results back, which we expect them in the next month or so, then we'll be getting into a first resource. So we're going to basically demonstrate to the market. And I don't think the market, obviously it's fair to say that they haven't really clue into what we have there, because we weren't that. We didn't know either until last week, where we got the first confirmation of what the sellers, our partners told us they have on the Samagra drilling, and we did some due diligence. Before we drilled 15 holes, basically to tween some of their holes to make sure that they got, we got the right, we have the right information. And obviously our tweening of the holes, the due diligence holes, they were better than what they're told us, basically. And now we're getting, they basically told us they had 6, 7 meters, 7, 8 meters depth on the zone, on the mineralization. Now we're getting 13 meters average. So we're double and we're getting higher grades. So it's one of those projects that, I'm in this business for 30 years. some projects, some discoveries you find, there are companies that are discovering a few, here or there every few years, but there's only a few discoveries, maybe one or two that happens every 50 years, every whatever. So it has the feeling. It's early days. You can't hold me to it, but it's early days. When you see 17 holes, first holes, very consistent, very, good mineralization, it makes you very excited.
Okay. No, this is very, very compelling. Okay, so everything is looking really good so far. So you're getting these very high grades. You get basically, it looks like the size of the project, because of the depth of it, could be maybe double what you were originally expecting. So for investors, so there's a couple things I would say. So number one is, in terms of the news flow, in terms of what are going to be the catalysts to move the stock, is when are you expecting the assays to be coming in? Like, what's going to be the velocity? How much in terms of like once a week? What kind of news flow can we expect for the next couple of months?
At least once a week for the next few months, Chuck. I think we'll have all these drill holes. We are getting information now from the assay labs, so we'll be processing it. We're also doing other work. Like we haven't stopped the exploration. We still haven't started the auger drilling, where we're testing new areas. We just finished a LiDAR survey, because then we'll get a very, very accurate topo of the site, of the target 4 area, basically. And as I mentioned, this target 4 is only one out of 8 on half the property. Well, our consultants basically told us that this project can be a 500 million ton resource. We don't know yet. It's just, again, it's early days. And to give you some perspective, there's another company that have a similar deposit or deposit or resource in Brazil, and they have a valuation of 400 to 500 million Australian dollars. We had a valuation of 25 million Canadian dollars. So if we, in the next little while, if we can really prove it up, if we can really, then there's a lot of upside for everybody, for investors and for this company.
Okay, so there's a comparable company, right? That basically their valuation. So they have a resource. They have a resource. You don't have a resource yet.
They're more advanced. We don't have a resource.
But you will have. You're working towards that by January, you said, right?
Let's say that. Yes, that's the plan.
Okay. So in theory, again, I'm saying in theory, if you get this resource by January, in theory, yours could be equivalent, and they're trading at a 400 million valuation Australian. So that's I don't know. It's like 300, whatever it is. It's like $300 million, and you're trading at a 20 million valuation. So there's a big gap. There's a big valuation gap that for investors.
Jack, I don't know if we can really prove a similar resource by January. I don't know what the numbers would be, right? But the project has the potential to be a similar project. But between now and January, we're hoping, we're planning to get the first resource, so we can give a better picture to the investors. Like I say, here's X, tonnage. This is the X grade, and here's some more blue sky, and we're going to continue with the exploration, and also trying to advance this target 1, this target 4 area into development if we can next year. Maybe pre-feasibility but this is our plans. We hope it's early. I don't, again, you guys can't hold me to it, but this is the plan.
High risk. Look, at the end of the day,
high risk, high reward. Let's put it this way.
High risk, high reward. Right. Yeah. I mean, we're seeing the bottom line is that we could see that the market is willing to pay, let's call it 400 million Australian for something, not too far away, which is, we're going to know. We're going to know in the next couple of months how you compare to what they have. Again, we're not saying it's going to be apples to apples and maybe apples to orange, but it's not. But there's a huge. It just shows the possibilities of what's possible.
in the next few months, we're going to have a good indication. I don't know where, but it will be a good indication of what the possibilities are here.
Okay. Yeah, and that's the important thing. What people, I think, look, it's important for investors to understand. Okay, what is the upside potential, and what's my downside risk? So the downside risk in the stock is, where is it? It's 20 cents, whatever. It's near the lows, so maybe it's a couple pennies. But if this thing hits, if you get this resource in January, and it's anywhere comparable to what these guys have, again, the upside is a multi-bagger potentially. Again, we're not making any projections.
Right.
The possibilities are there. So, okay, so it's very interesting. Now, also, so this is just a rare earths project. And so that could be worth, a multiple of where the stock is. And then also, of course, you have the legacy projects in Canada for, the rare earths and also the uranium, which, again, the uranium, I don't know, I think the uranium is something which is not even being valued. I don't. Is the market not valuing your uranium or the rare? Because it doesn't add up. In other words, like you have so much in there that the market basically is not paying for everything that you have. And I think, uranium is going to be one of the big generational resource opportunities because again, look, there's just if we're going to go to this, transition to electric vehicles, which everybody's pushing for, everybody wants the EVs, right? And I think they're going to outlaw gas engines in California, I think in 6 years, or by 2030, I believe, in California, only electric vehicles. Where are they going to get the electricity? I mean, where are they going to get the energy from? They don't have, it has to come from nuclear. That's the only way. Everybody's coming to that realization. So the nuclear is going to be the only way to go. And, again, like the experts that are saying $150 a pound, I could see. What was the high for uranium a couple of years back? Wasn't it over
$141?
Okay. And by the way, that was when was it? In 08, I think, sometime? Or
I think it was something 08, and then we had another spike around 2010 or 11. Yeah.
But that wasn't even based on demand. Like there was no demand for electric. I mean, it was more like supply disruptions and stuff. It wasn't based on massive need for electricity at that point.
Well, Jack, it's my personal belief that the world is undergoing a new industrial revolution, right? Like a few hundred years ago, we had an industrial revolution, right? The world changed. Right now, there's undergoing another revolution. Is the clean energy, the transition to the clean energy, and for the transition to clean energy, we're definitely going to need rare earths, and we're definitely going to need uranium, because uranium can generate clean energy besides other sources like the wind turbines and the
one thing I want to add is, okay, you're saying there's big revolutions, right? So AI, right? AI is, everybody's saying this is going to be as much of a game changer as I don't know, the industrial, and it's true. It's going to be, no question about it, right? What people also don't realize is that for AI to work, you need these massive data centers. I mean, because again, it's basically you have these giant brains, right? So you need massive data centers, which take up massive amounts of electricity. You have the Bitcoin. Everybody, what people don't realize, Bitcoin crypto mining takes up massive amounts of electricity. So all these things, all these applications, everybody's all excited about, all these high-tech things, they all have a massive demand for electricity, and the only way to meet those needs is going to be with nuclear, with uranium. And so, long term, again, like there's, I'm sure, a lot of Canadians watching this program, and what was the famous hockey player Wayne Gretzky? He was asked, "Why are you so successful?" He says, "I go to where the puck is heading." So the puck, the puck is going to uranium. So I don't know if it's going to be this year, 2 years from now, but I've owned uranium stocks for like 5 years plus, right? Because I mean, it's like, I don't know if it's going to be this year or next year, but there's no question that demand for uranium is going to go through the roof very, very shortly, because there's just not enough. The fossil fuels can't supply our needs. I mean, with the EVs and everything, it's becoming more obvious. And I think where your position is a very good place. So basically, Tom, I'm sorry, I went off on a tangent. So my
Don't
understanding
worry.
is
Don't worry. Jack, what I personally believe, we're in a mega trend. This transition to clean energy is a mega trend, and companies and investors who sort of getting involved or get with it, in the long run they will do well. Like as you said, it's hard to say if it's going to happen in 6 months, a year, or 3 years, or whatever. But the trend, as far as I'm concerned, the trend is there. It's happening. We've got to change to clean energy. There's no two ways about it. We've got issues with the environment. We've got issues. Now, Appia, personally, and Appia, we're really happy to be part of this, transition, or this clean energy. It's environmental friendly. It's not only making money. You're helping out. You're doing your part to change this, the environment, right? So we're happy that way. The world, we're going to need, for all this thing to happen, we're going to need a lot more rare earths. We're going to need a lot more power, uranium. We're going to need a lot more infrastructure to move the power around, right? Like, I don't know if the current infrastructure that we have, will handle all this usage, right? We need upgrades, but there's a mega trend that is happening, and I think companies, people that get involved, in the long run, or short run, whatever it is, they will. My personal belief is they will do well. So,
yeah, and so basically, but your uranium project, essentially, you're kind of, I guess, waiting to do more drilling. When prices pick up. I mean, you kind of have it. What is your idea to keep it as kind of as a long term, or what's the thing?
The Elliot Lake project is like a call on uranium and rare earth prices. If you can picture oil from the oil sands, if the oil price is $30, they don't make any money. It's like when uranium is at $30, it doesn't work for us. But if uranium is $100, $120, $90, whatever, plus the rare earths, this project, it's a large project. I haven't mentioned that there's a historical resource. Based on historical drilling, we can really increase that resource. We know where to drill. We're going to get it. It's low grade, but it produced for 30, 40 years from the 50s all the way to the 90s, over 300 million pounds of uranium, very consistent. Denison mines were built there. Rio Algom was producing there. There were 8 mines. So there's no risks when it comes to production or anything like this. It's just a question of price economics, right? So should the price go up, so we don't have to drill right now anymore. But if we wanted to drill more, we know where we're going to get some more, based on historical drilling.
Okay. So essentially, for that project to make sense, you need uranium to be about what, $100 a pound, roughly?
Well, listen, any over 80 for sure. Like or 80. I mean, the higher the better, obviously. But like $100, it would make sense. And also, for every we have there's actually 2 reefs there. The lower reef has more uranium. The upper reef has more rare earths. So we can have 3-4 pounds of rare earths on the upper reef, and we've got a pound or so of uranium at the lower reef. If we combine the two, we've got a sort of a 9 meters mining width, so we can really do mechanized mining. Should the price go up and all this, and so there's an option to produce uranium only. There's an option to produce rare earths. There's an option to produce both, should the economics be there, right? So for the time being, as I said, I don't think we get any valuation at all. Any credit of this, but it's there.
So this stock has basically option. There's a lot of optionality here.
Right.
Is the take.
Right.
So you have the rare earths, the exploration project right now in Brazil. You're getting some, really strong numbers there. You got these, high grades. You got a bigger zone that you were expecting. you're moving towards getting this 43-101 resource by January. That's the plan. Maybe a pre-feasibility study by next summer, you said, for that one?
Well, no, we're going to do we're planning a first resource, a 43-101 resource. After that would be a preliminary evaluation, economic evaluation, a PEA. And then based on that, the next phase, if things come the way we expect them to come, the way we see, then the next phase could be a pre-feasibility study. We're basically, what we've done is on this target 4 area, we've done drilling every 100 meters. And then outside of that, we've done every 200 meters. And then outside of that, every 400 meters. So then the next step would be to go back and drill, on a tighter spacing, right? So we get a better comfort level, but this first drilling that we did will give us a very good picture, good idea of what the mineralization, what the grades are in there. Now, the other thing that we need to do is we need to do some metallurgical studies. We've done some preliminary ones, and it shows similar recoveries from the rare earth recoveries from like other deposits, but we need to do a lot more studies. We need to do a lot more metallurgy, mineralogy. So and then go from there basically. But what we're pointing out here is we've got a project that looks really good. The initial results from the drilling looks fantastic. I think we're going to get a better picture in the next few months, and I'm hoping that the market will, as soon as as we get news out, the market will reevaluate us, or will look at us and say, yeah, this thing looks better each time, or whatever, right? So that's what that's where at least what excites me, and I think that's looks good, and I think it's it has a good chance. Like we have a good chance to get a premier project here.
Okay. No, definitely. From an investor's perspective, there's this stock. There's multiple catalysts, or multiple shots on goal, as you would say, multiple drivers, to create this, a significant upside, and especially based on, you mentioned one of the comps, one of your neighbors there is trading at a 400 million valuation. A little bit more advanced in the rare earths. So it just shows what the possibilities are. You're at 20 million, they're at 400 million. Australian, Canadian, whatever. So, Tom, I want to wrap up on 2 things. I want to ask you is, in terms of, so you mentioned the news flow. So we're expecting assay results on a weekly basis for the next couple of months, right?
Yes.
Okay. Now, then the last question I really have here. We don't really have any audience questions today. It's usually, I guess, it was the first one. Your first time on, people are shy. We have to develop the audience. But the question I always like to ask CEOs on these programs is, okay, in your opinion, what would you say are the top 3 reasons why, investors should consider, Appia today?
Well, the main reason is we're working. Appia is involved in 2 commodities that are in high demand. It's as part of the global transfer to clean energy. The world would need rare earths and uranium for energy. So that's number 1, right? Number 2, we think we've got a very exciting project, a very large project in Brazil, besides the other project that we have, that we think that this could be a world-class premier deposit, a very exciting discovery. So that will give a big exciting result, news, and upside for the company and the shareholders, right? And the other thing is, again, we have uranium in the picture, and then which is is in high demand. The price in the last year or two went from lower 20s to mid 70s, whatever it is now, and it's the understanding or the forecast is that it's going to be much higher because we need it. So so we can ask for anything better. We're in the right sector, in the right market conditions, in the right cycle. Let's put it this way, because everything in life is cycles, right? And this cycle is here now. We feel that way. And then don't forget the Alces Lake project. This is a world-class rare earth in magnet in monazite. We've been drilling there. We've been exploring, and this combined with the processing facility in Saskatchewan, the government facility in Saskatchewan, which will process monazite. That's a very exciting situation, because Appia doesn't have to build a processing plant. We don't have to operate our processing plant. We can take advantage of that. So we've got a lot of irons in the fire, basically, and there's some. I gave you one catalyst in the next few months. You're going to get a better picture of what we have, and you and us, and we can have a more in-depth discussion.
Yeah, no, there's definitely multiple shots on goal between the rare earths, between the uranium upside. You got a lot of blue sky potential, and of course, we already have this. What I find compelling is about this neighbor nearby. Do you have the name of the company that you have the stock symbol, the one that's 400 million valuation?
Listen, when you say neighbor, it's in Brazil. Let's not, it's not next door. Okay, let's.
I mean, but
the name of the company is Meteoric. It's an Australian listed company, basically. The information is out there. Investors can look at it, and I think it went basically from a very low valuation all the way to, I think, like a few weeks ago they had a news release out that they crossed the $500 million valuation. So so that's something to look for.
Yeah. No, but look, you need to have a guidepost of what are the possibilities. Right. So these guys are in Brazil. They're doing rare earths. Again, we're not saying that Appia is going to be worth $500 million.
Oh, no.
There's a possibility based on here's what somebody's doing. It's not. It's not like it's something similar. Obviously, they're more advanced, but it goes to show you what the possibilities are. Where these guys went from basically nothing to a $500 million valuation. You're at a $20 million valuation. So it talks. That's kind of the things that we look for. Okay, Tom. With that said, thank you very much. And thank you everybody for joining us. Hopefully next time you come back, we'll have some audience questions and we'll talk about the latest assays and everything else.
Thanks, Chuck. Really appreciate it. Thank you.
Thank you again, Tom. Thank you for joining us. And thank you again.